Welcome back to my channel, Business Click Connect, and today I'll be looking at the CSEC Principles of Accounts Paper 1 January 2020 exam. Let's get right into it. Question 1. Which of the following financial statements shows the value of a business assets? A. Balance sheet. B. Trading account. C. Cash flow statement. D. Profit and loss account. And we know that the business assets is shown in the balance sheet, so the answer is A. Question 2. The main financial users of accounting information are, that's the main internal users, that is A, which is the manager. Question 3. Which of the following features are benefits of using accounting software? 1. Integrated analysis of information. 2. Almost immediate updating of records. 3. Programmable to recognize irregular entries. The answer is D, which is 1, 2, and 3. Moving along, question 4. Which of the following list of activities shows the correct order of the stage in the accounting cycle before final accounts? A. Posting to ledger, journalizing, trial balance. B. Posting to ledger, trial balance, journalizing. C. Journalizing, posting to ledger, trial balance. And D. Journalizing, trial balance, posting to ledger. Of course, we know that journalizing comes before posting to ledger and then the trial balance before the final account. So the answer is C. Number 5. The following information refers to the assets and liability of Mr. Jones. Cash at bank, 800. Inventory, 400. Payables, 600. Receivables, 125. Bank overdrafts, 250. Cash in and 500. It says from the information above, Mr. Jones' capital amount is, we know that capital is assets minus liabilities, so we add all the assets, which is cash at bank, inventory, receivable, cash in hand, and we subtract payable and bank overdraft. So the answer is D, which is 975. Moving along, number 6. Partnerships are formed for the purpose of 1. Combining capital from different persons. 2. Benefiting from different skills and specializations. 3. Sharing ideas, experience, and responsibilities. Partnerships will be formed for the purpose of all 3, so the answer is D. Number 7. Which of the following is usually used to complete a general journal entry? We know that the general journal entry, of course, finishes with narration, so the answer is A. Question 8. Item 8 refers to the following balances at the end of a financial period. Motor vehicles, 2,000. Payables, which is the same thing as creditors, 3,000. Receivables, which is the same thing as debtors, 2,000. Capital, 1,100. Or 11,000, I'm sorry. And building, 10,000. And it says what is the total amount for the assets. So that's motor van plus receivables plus building, so the total is $14,000, so the answer is C. Number 9. Ram Singh purchased goods valued at $500 on credit. He paid off his bills within the grace period and so received a 10% cash discount. How much did he pay for the goods? So we find the 10% cash discount, which is 10 divided by 100 times 500. That gives us $50. Then we subtract the discount of $50 from $500. We get $450, so the answer is B. Number 10. Which of the following items are examples of current liabilities? We have 1. Mortgage. 2. Account payable. 3. Accrued wages. Of course, mortgage takes a long time, more than a year, to be repaid, and so it is not a current liability. So 2 and 3, so the answer is C. 2 and 3 only. Number 11. Which of the following entries in the 3-column cash book are contra entries? A. Debit cash, credit bank. B. Debit cash, credit cash. C, credit cash, credit bank. D, debit bank, credit bank. We know contra entries where the double entry occurs within the cash book. One must be debited, one must be credited, one of the account, that is. And so the debit cash account and credit bank account would be the contra entry, that is A. Moving along, number 12. Item 12 refers to the following balances taken from the books of Sheridas Limited on 30 April 2019. And we have a table with some balances. Rent owing is 200, cash 3,500, payables 1,200, prepaid insurance 300, bank overdraft 400. It says, what is the current ratio of Sheridas Limited? Current ratio, the formula is current asset divided by current liabilities. So we add our current assets. In this case, it is cash 3,500 and prepaid insurance of 300. And then we divide by our current liabilities, which is rent owing plus payables plus bank overdraft. When we do that, divide the current asset divided by the current liabilities, we get 2.1 to 1. So that is our current ratio. Number 13, which of the following entries should be used to post sales returns? Sales returns are returns, of course, made into the business by our customers. So it is A, debit sales returns account, which is the same thing as return inwards account, and credit the receivable account, which is the same thing as our debtors account. So it's A, debit sales returns account, and credit the receivable account. Number 14, which of the following persons monitor a company's financial statement to discover a desirable rate of return on capital? Of course, you want to see a return on your capital if you are an investor. So the answer is A. Item 15 refers to the following information from the books of a company: cash sales 10,000, credit sales 45,000, inventory on hand 40,000, joints 8,000, cash purchases 12,000, credit purchases 20,200. From the information above, what is the correct closing total for the sales account? Of course, it is the two sales item, which is cash sales plus credit sales, give us 55,000. Number 16, which of the following credit would not appear in a cash book? A cash book is used for the receipts and payment of cash and check transactions. So therefore, the credit entry should not be in. So goods sold on credit. So the answer is B. Number 17, K can a debtor of A and B enterprise settle his debt of $120 less discount by check. How should the double entry be recorded in the books of A and B enterprise? Of course, it would be C, receiving 117 as check. Discount is given for $3. Discount allowed, and we credit K can account for 120. So the answer is C. 18, Mr. A. Jones paid $250 in cash for repairs to machinery. This transaction was entered in the cash book and posted to the ledger. The double entry involved would be C, which is debit the repairs account that was done, and credit cash account that was used to pay for the repairs. Moving along, number 19, in order to avoid writing numerous checks for small amounts, a firm may set up a, and the answer is B, petty cash fund. Number 20, items 20 refers to the following information from the sale books of R. Lewis. And the information is shown here. And it says, how would R. Lewis record this information in his ledger? So we have 30 items at $105, give us 45. There's a 33 and 1/3 trade discount of $15 and $30. So to record this transaction, we would debit H Rick's account and credit sales account $30. So the answer is D. Moving along, number 21, a businessman bought a new computer for $6,000. He paid $4,000 in cash and traded his old computer. What is the entry to record this transaction? Of course, we're buying a new computer, so we're going to debit the new computer account, and we're paying for it by cash. So we're going to credit cash, and we're also paying for it by trading the old computer. So we're going to credit the old computer. So the answer is D. Number 22, when a proprietor withdraws cash or other assets from a business, what effect does it have on joint or capital? We know, of course, that it's going to decrease our capital, so the answer is B. Items 23-25 refers to the following statement of financial position balance sheet. Here we have some fixed asset of premises 10,000, fixtures, furniture and equipment 4,500, gives us a total of 14,500. Then inventory 2,500, receivables 3,500, bank of current account 2,100, cash in hand 500, giving us a total of 8,800. When we add that together with the 14,500, we get the balance on this side for 23,300. Then cash at start 24,000, less loss for the year 2,200, giving us 21,800. The less joint for 1,800, giving us $20,000, and then our current liabilities, which is creditors 2,100, and accrued expenses for 1,200, a total of 33,000. So on that side we have a total of 23,300. Number 25 says, what is the total value of fixed asset? Of course, that's premises plus furniture, fittings and equipment, giving us a total of 14,500. So the answer is B. 24, the closing capital is capital at start, 24,000, less loss for the year, less joins, which is $20,000. So the A answer is A. And 25, the working capital is current assets minus current liabilities. So our total current asset is 8,800, or total current liabilities is 3,300. When we minus, we get 5,500. So the answer is B. And number 26, in calculating the gross profit percentage, gross profit should be divided by net sales. So the answer is D. Item 27 refers to the following information. So we have an insurance account with an opening balance of $700. Amount of $8,000 being paid on the 15th of January by check into the bank account. So we have profit and loss at the end of the year for $8,100, which shows the insurance expense for that period, leaving a balance of $600. So the question number 27, what is the amount of insurance prepaid at the end of the year? It is $600, which is A. Number 28, which is the following financial documents show the net earnings of a business. That is A, income statement. Moving along, number 29, item 29 refers to the following table, giving us information of periods of debt with over 3 years, amount accounts receivable, and the provision for bad debt. What is the total provision for bad debt? And it says total, so we'll find the provision for year 3, which is 3% of 6,000, plus year 2, 2% of 4,000, plus year 1, 1% of 8,000. So the answer is $340. Number 30, an asset purchase for $1,000 depreciated at a rate of 10% per annum using balance method. What is the book value of the asset at the beginning of the third year? The answer is A, 10. For the reducing balance method, for year 1 is 10% of 1,000. We minus that, leave 900. 10% of 900, which is 90,000. We minus it from the 900, we get a 10. So the answer is B. Number 31, an increase in the provision of bad debt will D, included as an expense in the profit and loss account. Item 32 refers to the following table, which shows the summarized position of Foster and Scott Limited at 6 April 2019. We have current liabilities of 60,000, current assets, non-current assets, and non-current liabilities. And it says what was the capital of Foster and Scott Limited at 6 March 2018. Of course, we know that capital is assets minus liability, so we add all the assets, both non-current and current. 200,000 plus 100,000, we add all the liabilities, both current and non-current, and then we subtract the total liabilities from the total assets. It gives us $90,000. So the answer is B. Moving along, item 33 refers to the following information. On January 1, 2019, $10,000 was paid towards an advertising campaign. Of this amount, $7,000 was used by 31st December 2019. 33 says what was the amount of advertising prepaid at the year end. So we're going to subtract the $7,000 that was used from the $10,000 was paid. So we have $3,000 being prepaid at year end. So the answer is A. 34. A standing order of $25 for insurance appears in the debit column of the bank statement. The amount does not appear in the cash book. How is this item treated in the cash in order to update the cash book? The answer, of course, is A. We're going to credit the bank account with $25. Item 35 refers to the following information provided by the business. We have total unpresented checks of $120, late lodgement not entered on bank statement of $150, and balance as per cash book. What is the balance per bank statement? So what we'll do is to start with the balance as per cash book of $560, add the unpresented check of $120 minus the late lodgement or the lodgement not entered for $150, and the answer is $530. So the answer is D. Item 36 refers to the following information. We're given a table with inventory at the 1st of January, purchasing during the month, and cost of goods sold. What is the inventory at the end of January? The answer is D, which is 1,300. 37. Mrs. Allen invested 20,000. Mrs. Brown and Mr. Cable invested 5,000 each into the same business. The losses sustained during the year was 1,000. The partnership agreement is silent on the item of losses, although profits are to be split in the ratio 2 to 2 to 1 in favor of Allen, Brown and Cable respectively. How much of the loss must be borne by Mr. Cable? We use the same proportion to share the loss as the profit, 2 to 2 to 1. Cable is getting 1 of the total, which is 5, so 1/5 of the $1,000 is $200. So the answer is B. Number 37, Mr. Green and Mrs. Black agreed to establish a partnership, Green and Black Company, and each of them deposited 5,000 into the bank account. Or should this be recorded in the books of the partnership? The answer is D. We debit the partnership bank account of 10,000 and credit the partner's capital account to show their contribution of $5,000 each. Number 39, a trader had an opening capital of $3,900 if his joins were 900 and his closing capital was 4,860. What was the net profit? Then the profit would have been $1,860. Item 40, Rose contributed $7,000 in cash and a motor vehicle worth $3,000 to a partnership. Rose's contribution to the partnership would be recorded in the journal as, the answer would be C. The cash and the motor vehicle is debited and the capital contribution is $10,000. Number 41, in a cooperative society, the daily affairs are administered by, the answer is B. Persons elected or appointed to do so. Number 42, the owner of a business paid a personal medical bill from a bank account of the business. The amount was debited to the miscellaneous expense account, which as the following concept was violated. Of course, business entity, because the business and the owner should be, the affairs of the business and that of the owner should be separate. So it's business entity. Number 43, a photocopying machine valued at $5,000 depreciated at 10% using the straight line method. What is the book value after 10 years? The answer is A, which is 4,000. For the straight line method, it's 10% of $5,000, which is 500. We subtract from 5,000, we get 4,500. The same 500 is subtracted because the straight line method is fixed. For the second year, we subtract the 500 again, which leaves us with 4,000. So the answer is A. Number 44, according to the Partnership Act, if there is no deed of partnership, the amount of the profit received by each partner would be, of course, divided equally. A. 45, which of the following items on the statement of financial position will differ most in presentation when comparing the books of the company and the books of the sole trader? Definitely that's the capital section. The answer is D. 46, the reward of profit received by a shareholder in a limited company is called dividends. The answer is C. Moving along, 47, how does an increase in bad debt affect the sole trader's financial statement? It, of course, decreases the net profit. The answer is C. Which of the following accounts are nominal? Wages and rent. That's A. 49, which of the following terms best describe the financial accounts of a non-profit organization? The financial account of a non-profit organization, we have receipts and payment statements of financial position. So the answer is C. 50, an example of a capital expenditure is money spent for purchasing of new buildings. So the answer there is D. Number 51, the purpose of an appropriation account is to show how the net profit distributed in a partnership or a cooperative. So the answer is A. 52, if revenue expenditure is overstated, which of the following items will be affected? Of course, if revenue is overstated, expenditure, which is an expense overstated, then it's going to affect our, in this case, surplus, profit surplus. So the answer is B. 53, when writing up a books of partnership, which account must each partner have? Each partner must have a current account. So the answer is C for 53. Item 54 refers to the following information. J being manufacturing account for the period ending 31st December 2017. So here we have a manufacturing account giving us information, and 54, so what is the cost of the raw material consumed? That is inventory of raw material on the 1st of January plus purchase of raw material during the year. Then it's a total of 53,000. From that we left the closing inventory of raw material of 1,500. So the answer is 3,900, which is C for number 54. Number 55, item 55 refers to the following table, which shows balances of the assets account of Bay Row Club at 30 June 2019. The amount of the club's accumulated fund was, the accumulated fund is similar to that of capital. This similar to capital in other business organizations. So it would be asset minus liability. Here we don't have any liability, so it's all assets. So we add the assets. So the answer is 9,897. Moving along quite nicely. 56, salaries paid to the administrative staff in a factory would be classified as which of the following types of costs? Indirect costs, of course, and that is B. 57, when a company declares a dividend of 15%, the dividend warrant of a shareholder owing $1,500 ordinary share is, we define 50%, 15% of 1,500. The answer is $225, which is B. Number 58, prime cost is $79,110, office expense $3,000, and factory overhead $4,720. How much is the cost of production? The cost of production is calculated in the manufacturing account. Office expense belongs to the income statement, so therefore it is only the prime cost of $79,110 and the factory overhead of $4,720, which will be added to give us a total of $83,830. The answer is C. 59, item 59 refers to the following list of balances. So we have work in progress at the 1st of January, work in progress at 31st December, cost of material used, indirect expenses, factory wages. It says using the list of balances above, what is the cost of production, cost of goods produced? So it is adding cost of material used plus indirect expenses plus factory wages plus work in progress at the 1st of January minus work in progress at the the end of December, which is 1,700, and the total would be 11,100. So the answer is C. And for number 60, P. Amos is employed by a construction company at a rate of $7 per hour during a week. He works his basic week of 40 hours. The income tax due on his pay is $20, and he's also liable to pay national insurance contribution of 5% of his gross income pay. What is his net pay? So we find the gross in the gross pay first. He works 40 hours at $7, so that's 4 7 28, $280. Then we find 5% of the $280, which gives us $14. We add that to the insurance that he has to, that to the income tax that he has to pay, and we subtract all of that from the 280. So the answer is 246, which is A. Thank you very much for joining in. Remember to subscribe, share the link with a friend, and also join me for the next video.